Hello students. This video lecture is an initiative taken by Shet Vidya Mandir Junior College of Commerce and Science. This video lecture is for 12th standard commerce students and our today's topic is preference shares and features of preference shares. Today we'll discuss in detail the features of preference shares. As the name indicates, these shares have certain preferential rights. The following preferential rights are termed as preference shares. A preferential right as to payment of dividend during the lifetime of the company. That means the preference shareholders get priority in receiving dividend over the equity shareholders. Second, a preferential right as to the return of capital in the event of winding up of the company. It means when the company is closing down or winding up, preference shareholder will get their capital before equity shareholders. Preference shareholder do not enjoy normal voting right. They can vote only on the matters affecting their interest. Preference shareholders get dividend at fixed rate. That means whether the company is making profit or loss, preference shareholder will get fixed rate of dividend, and that too before equity shareholders. So cautious investors, those who don't want to take risk on their investment, they invest in preference shares. Preference shares are subject to less risk as the preference shareholder get fixed rate of dividend and they also have a priority in receiving the capital back at the winding up event. So now let us see the features of equity shares. Our first point is preference for dividend. Till now we have seen number of times that the preference shareholders get priority in receiving the dividend. That means the preference shareholders are paid first and then the equity shareholders. Preference for repayment of capital. Preference shareholders have a priority or a preference over equity shares in respect of the return of capital when the company is winding up. Here, the preference shareholders, they are safe from the capital losses which equity shareholder may face. Our next point is fixed returns. Here, the preference shareholders are safe and it is a benefit point for them. The rate of returns on the investment of preference shares are fixed in nature. This rate of dividend is decided at the time of issue. The preference shares are entitled to get dividend which can be paid only out of profits. In many cases, whether the company is making profit or not, they have to pay fixed dividend to the preference shareholders. But in financial crisis, if the directors decided not to pay dividend, the preference shareholders have no claim for dividend. Our next point is nature of capital. Preference shares are not the permanent share capital of the company. Every company have to redeem, that is, they have to pay back the capital to the preference shareholder. So a company cannot issue irredeemable preference shares. Generally, when the company is in need of more funds, they can raise capital by issuing preference shares. Preference share capital is safe capital because the rate of dividend is fixed and the market value does not fluctuate because of the performance of the company. Voting rights. The preference shareholder does not enjoy normal voting rights. They can vote only to the matters related to them. Matters such as if there is a change in terms and conditions related to their repayment, or suppose a company has not paid the dividend and it is in arrears, that is, it is still payable to them. In such matters, the preference shareholder has a right to vote and pass a resolution. Risk factor. Basically, there is no risk in investing in preference shares, as there are two main advantages, that is, priority in receiving the dividend, that too fixed rate of dividend, and priority in repayment of capital. These shares are a boon, or you can say a benefit, for preference shareholders during the depression period when interest rate is continuously falling. Face value. The face value of preference share is relatively higher than the equity shares. They are normally issued at face value of 100. Rights or bonus issue. As explained in the previous lecture of equity shares, the issue of bonus shares and rights issue is only for equity shareholders. Market value. The market value of preference share does not change as the rate of dividend is fixed in nature. There is no point of capital appreciation, as the market value of preference share is not dependent on the performance of the company. No matter the company is at prosperity stage or a crisis stage, the market value of preference share won't change. Nature of investors. Students, till now you would have understood that investment in preference share capital is much safer than investing in equity shares. So, the investors, those who are very cautious in investment, they won't take risk and invest in equity shares. They will invest in such investments where they will get fixed returns.